Hey, what's up, Facebook? My name's Adam Merrill, and these are Mortgage Minutes with Adam. Today we're going to be going over what are closing costs. I'm going to go over that with you guys, explain to what those are, how the fees get calculated, and some of them that you can change around, some that you cannot. So closing costs are fees that are associated with originating a home loan. So whether it's a refinance or you're purchasing, you're still going to have closing costs. They're going to vary a little bit though. So it's going to start out with origination charges. The origination charges, they can be discount points. And discount points are, like I said, whenever we were discussing rate, are something you can do to negotiate your interest rate down. You can pay for a portion of that up front. Some people might be required to do it to qualify for a certain rate. So it'll be that one. It'll be your admin fee and your processing fee, which would be basically what the lender is charging you to administrate and process the fee. There's a lot of people that go into doing these mortgages. So it'll be paying for all of their time and their wages and their salaries to do that. Some people charge an origination fee, which is typically about 1% of the loan amount. So if you're buying a $200,000 home, they would charge you 1% of that, which would be $2,000 to originate the loan. We do not charge origination fees. It's something that makes us different than most lenders, is we do not charge that. So just a heads up, if you are looking for something, maybe it's a little bit less expensive, we can help you with that. Typically, those origination charges are about $1,500 to anywhere up to 3% of the purchase price of the home. In the state of Texas, you cannot have origination charges that exceed 3% of the price of the home. So if the house is $200,000, your origination charges portion cannot exceed 3% or $6,000 of that amount. Another one that it'll go into will be another area, which would be services, which would be services you're going to be paid for that are outside of the mortgage company. So your appraisal, you'll pay for your appraisal that your appraiser will come out and take care of to value the house. Sometimes that can be paid for up front, and it may be reimbursable whenever you close on the home. So that will be an upfront charge that may be reimbursable whenever you close. You have to check with your lender to see if it's possible to do that. Another one would be document prep. Again, another one of those fees to paying for the attorneys and everybody else that's going into doing the deal and pay for all that. Credit report. Credit reports are very expensive, and whenever we have to do refreshes and relook at credit bureaus over and over again just to try to get somebody to a certain situation, it makes that very expensive. So that's that fee that goes back and helps us cover that part. Pest inspection, depending on the home and the government and the loan program you're going with, some of them might require you have a pest inspection on the house. So you got to pay for that, and again, that's separate. That's something we don't control. That's a third party that you have to pay for to get that completed. Septic inspection. If the house has a septic, you will be required to have a septic inspection to make sure everything is in working order. They're typically not that much, but it is something you do want to have done just to protect yourself, make sure you don't have to have these massive repairs done on it going down the road. The same thing with a water well. If the house is on a water well, you have to pay for a water well inspection. Again, it's not that much, but it's something that will definitely help you out. Attorneys prepare all of the documents that go on here. So where I would go through all of your documents and your fees and everything before you go to your title company to close, which we'll get into that another time. It'll all be sent to an attorney. The attorney will review it all, make sure all the fees are in line, make sure all your disclosures are done, make sure everything else there is completed before it goes to the title office for you to close. So it's already been prepared. People have already looked it over, make sure it's legal, make sure everything's good there, but you got to pay for that attorney that goes into it. Title policy. If somebody sells you a home, okay, and that piece of property somewhere down the line got divided up and maybe somebody didn't sign off on the title like they were supposed to or whatsoever, you'll be liable for that as the new owner. And you got to basically go through and try to sue somebody, and it's just a big mess. So whenever you do a title policy, this title company goes out and they do all the investigations and they certify that this is a valid piece of property, you can buy it. And if they are wrong, that title policy is insurance to basically help you get that whole deal straightened out. If you're financing a home, I doubt you're ever going to find a lender that will let you go without having a title policy because they are extremely, extremely important. But if it's something you're paying cash for, it is your option, but it is definitely not recommended whatsoever to not do it. But it is your choice if you're paying cash for a house. And those are typically going to be anywhere between, depending on the state where you are and the offices, they can be anywhere between $300 to $3,000 to $4,000 depending on the price of the home. It's based off its sales price. The ones I typically see are $1,000 to $1,800, about somewhere right around in there. Loan guarantee fee. If you're going with a government loan, they typically have a guarantee fee for their underwriting. So USDA, VA, FHA will have a fee that'll go in there for them to underwrite it, and those can vary just depending on loan size and the program. And then there is something called an MCC, which is a mortgage credit certificate, which I'll go over with you guys another time to explain what that is. But you have to pay an upfront fee to get your mortgage credit certificate, and sometimes that can help you qualify for a certain dollar amount of a mortgage. So those are all the services that you pay for, and those things all get bundled up. They can vary $1,000 to $2,000 or $3,000 just depending on what all is in there. And then recording fees, you're going to have to pay to have the deed recorded and the mortgage recorded with the county. So those are fees that you pay. They're typically not that much, a few $100. And those recording fees get taken care of. Prepaid escrow. An escrow account is an account that is set aside, and every month you contribute to it as a homeowner to basically pay your taxes at the end of the year and to pay for your homeowner's insurance. They are required. You can typically forego a escrow account, but you're going to pay a higher interest rate because it's a higher risk to the lender for you not to have that prepaid. So typically whenever you buy a house, you have to pay your entire homeowner's policy up front. Sometimes there's exclusions for having to pay. They can pay a lower amount. That's typically what it depends on, what you'll pay. Then initial escrow. You have to start your escrow account with 3 months of property taxes and 3 months worth of hazard insurance to make sure that you have enough that's covered in there. So that's where that'll come from. And again, it depends on the house. It depends on where it's located. It depends on what the property taxes are, how much money goes into that account. And then the seller can pay up to 6% of closing costs in Texas. I don't know what other states are, but in Texas it's 6%. So they have the option to do that. So you can negotiate whenever you buy a house for them to pay closing costs up to 6%. Typically they vary between $3,500. I've seen them upwards of $12,000 to $13,000. But again, with the loan size goes up, a lot of these fees are going to go up because they're going to be based off of that. So it's going to increase its amount that it's going to cost you to close on the home. But they can cover up to 6%. In some cases, they can cover 100% of the closing costs if they choose to, and make it to where you can buy a home. In some cases, with no money down at all, even towards closing costs. And then some of them may be financed through the loan, depending on the loan program you're going with. Some of them may be financed in there. So hopefully that answers a lot of the questions I hear about what are closing costs, how are they figured, and trying to break them down. There's a lot that goes into it. So the best thing is just look at it and ask your lender questions. Say, hey, what is this fee? What is that fee? Can this do this? Can this do that? And just so you have a better understanding of it. Again, my name's a.p.r. If you guys have any questions, I'll always ask for you guys just to give me some topics maybe that you want to talk about, that you want some answers to. I'll be more than happy to help out. Thanks.